David asks, "Hey, can you go over your hypos for today?" Yeah, but we're going to do that on the nightly report, um, so we're not going to be repetitive there. Paul's asking, coming into the weekly developing value area high, were you thinking about taking off your long and decided against it as volume spiked? Weekly developing value area high. So the question is, as we approach that reference, which was like 81 or so, I believe it's 82 now. I should share my screen here. 1 second. So weekly developing value area high. And here's the intraday chart and what that looked like coming into it, into the kind of this 81 level right here. It doesn't matter. It depends on your plans for the day. And ultimately there is no answer to this question, I think, and I think it's very, very important that everyone understands there is no answer. There's multiple ways to approach trade management. You can, by all means, put limit orders out there and just get out exactly where you see the destination or whatever the case may be. You can be more discretionary around those levels. So in this case, Paul's asking about, perhaps we come into this 81 area. Yeah, I guess it's a little higher, but in that general vicinity. And, look, I think it's fine to take it off here once there's like this pause. We've been riding the +2 intraday. That's typically not sustainable, much less to see some type of spike like we saw here into the close. That's not normal type stuff. So just because it did what it did, do not attach outcome to the quality of the decision around your trade management and your process. Don't do it. Day after day after day after day, everybody wants to attach outcome to the quality of the decision rather than the quality of the decision at the hard right edge when it looks like this, right? That's all that matters. So you can limit out. You could say that there was a stall here and a shift on the tape. I know we're not there yet, but I know David is. Paul is. You could come out early in front of the level because of that. You could sit around and wait for something to really come in and get lucky. And I don't mean get lucky in a bad way. I think a lot of people know that I'm a firm believer in getting lucky. And it blows through the level and you hang on and maybe you catch something extra, maybe you hold until the close. Whatever the case may be. Maybe you exit on this wick right here when it starts to turn. That's enough of the extra that you were getting. There is no perfect answer to trade management, and there is no way to, and well, there is a way, everyone does it, use hindsight to tell you what was the right or wrong decision. That's not the case. Very, very, probably the most important thing we'll talk about today. Not using hindsight to judge the quality of your entries, not using hindsight to judge the quality of a scale out, not using hindsight to judge the quality of an exit. Don't do it. Bring it back to your actual process and what was being told to you at the hard right edge where the decision was made. That's all that matters. Otherwise, you're just fooling yourself, and you're not making the improvements and really understanding markets better and your own trading and processes better at all. It's just this kind of like mouse wheel that you're on of chasing hindsight, which you're never gonna achieve. Really, really important. Great question. Let's see here. Patrick says, do you think there's a correlation between pre-market dissonance on long-term VWAPs and rotational price action intraday? Does one cause the other? I mean, anytime there's dissonance, I think that there is the potential for rotational price action, right? But there's so many ways that dissonance could be, right? So, dissonance could be in a very wide range. And what's going to be the implication there? Well, let's say we've got a really bullish level here and a really bearish level here. Well, price could come in that day and do something like this and then put together a really good trend. In fact, we've seen several days recently where this has been the case, kind of today as well, except today did this. But that's not the point. The point is these areas of dissonance, how we treat it depends on a lot of different factors. When they're really far apart, it's not really dissonance. It is dissonance, but it's not really day trade dissonance where it's going to tell us to sit on our hands, tell us to expect really rotational type behavior, or perhaps even what we call choppy action. However, the closer and closer up to a certain point, those levels become, the more likely, I think, some of the chop and sideways action and a lot of bar to bar overlap and those type things occur. So, if this level was down here and it was like this, well, now that makes a lot more sense that we might see some of this type stuff. While those two narratives are kind of right now, especially the higher and higher time frame, competing with each other. As the narrative lines in the sand, which are dissonant, get further and further apart, they're not exactly competing with each other in the same moment. And therefore, I think it doesn't create as much two-way type trade and chop. Now, when you get, let's go to kind of like the third phase. When you get dissonant areas which get really close to each other. So let's say this is a bearish zone and this is a bullish zone. How do we treat this? Does it create chop? Does the market stay in like a 2-point range? No, it doesn't. All of a sudden, this becomes what? One area. And we just need a bit wider of an acceptance view, right? We really need to see something show us like this, that aha, then the expectation becomes something like that. So as these dissonant areas get closer and closer and closer together, like really close, now all of a sudden it just becomes kind of one usable area that we look to acceptance using rhythm and whatnot to show us the way. So it's kind of like you have three phases or three scenarios, if you will, of potential dissonance. Good question. Rosie, want to talk about the last few days and CVA creation splits, etc. Sure. I saw several people today say that I did not merge the just a little bit left over from the day before yesterday with yesterday. And that's not true. I did do that. So here's what I have currently. I've recently cut off 4 old CVAs, and they're really old. I couldn't wait to get rid of them. They are the most recent things, but now that we've been trading in this area, these older CVAs become less and less useful. The first time we come through there, as they're kind of untouched and fresh levels, that makes them certainly, you know, more usable and whatnot. So here's what it looks like. You know, could I have put these together? Perhaps, you know, done a split somewhere here and put those together? Sure. But this is being respected really nicely, and I almost feel like it's duplicating that zone and it's not really changing anything. Not to mention that we were essentially kind of just one time framing down until we bounced once we got to this next CVA level that was previously untouched, and we bounced from there. So this day didn't show me much balance on top of here. So I'm kind of leaving that alone and continuing to lean on this one, which has just been working really well. From there, I guess we could go to like a little practice chart like this. Okay, so, you know, balanced up here, I think that's obvious. Here's those days that I was just discussing. Obviously gap down, this day is just kind of on its own. And then we have a good bit of balance that you can see comes into this market, right? It's obvious. There's a distribution. There's a distribution, right? Not the case with this. There's a distribution. And where is this? Well, you've got a tiny thing here, something there, something there. Like I said, this is long and toothy. There wasn't really any balance. Here there was. That's a clear distribution. We can cut this. An advanced cutting topic for you, which really usually won't make much of a difference. But sometimes I will look at this and I'll say, okay, where should I split this? And you know what? Actually, I was wrong about this. I didn't split it. I looked at it and I thought, oh, we need J period to have any excess at the low. So I actually, what I believe I did was I split K period in my prep. In reality, I should have just split J period most likely. But I guarantee you it's not going to make a difference between this CVA or this CVA. It doesn't matter. Okay, so splitting hairs here. Okay, so 1 or 2 ticks difference on the CVA high on this one, and 1 or 2 ticks difference on the CVA high on this one. If you're thinking areas, not lines, it doesn't matter. And so we have these two structures, which were, you know, they need to be a focus for today, right? And so, you know, wick this area, come up, law 10 compression, pour high, break, able to hold into this area as we start to kind of get closer to some, you know, weekly levels that we were talking about around 81 and whatnot. And sure enough, that capitulation was across that distribution, right, to the other side. So remember, where am I most likely to use and lean more so on structural CVA type stuff when we've got fresh CVAs like this that haven't been tested and traded through and they're not 2 months old, those type of things, right? Those are the best ways to use CVAs. Other than that, long-term VWAPs are, you know, become a focus when you don't have CVAs. And I think something we've seen over the past 4 weeks here since we introduced CVAs is I feel like when we taught CVAs, that week was nice because we kind of initially had some really good examples. And even the day I taught it leading up to that, really good examples of couple day balance, breakout pullbacks, return pullbacks, really nice little structural couple day balances and whatnot. And then we've gone through this pickup and volatility phase, and things have been flying around, and we've had to kind of lean more on long-term VWAPs a lot of times and things like that. And they've worked fantastically. Lately, you've seen going with confluent areas for likely destinations. You've seen mean reversion plays from kind of -2 extremes on multiple time frames. And then today it was kind of a day back towards kind of some structural type stuff, and then looking at a key inflection here to see if the month was going to stay imbalanced down and whatnot. All right, good. Glad that's what you did as well. Are you going to expand more, Stefan asks, are you going to expand more on how to build a playbook at some point? You've really got all the tools to do that. Obviously, we haven't talked about order flow. We're going to do that on Monday, but you've got everything you need to do that. What is a trade for you, right? What might you build a playbook on? Well, it should have a narrative component. NADRO is essentially a playbook template for you. And then I teach you the tools that we use to kind of identify those things. So if you're going to build a playbook, build out a narrative that you're using, acceptance, how you use DVA to access the trade, rhythm, those type things. But really, to me, for us, playbooking is mostly, and it doesn't have to be, but it's mostly about narrative. How you're combining these type things, and then everything else, like, sure, could you include in your playbook? And I think this would be very helpful for you guys as beginners, a lot of you with this type stuff. Yeah, make sure that you have a detailed section on, where you place your stop and how you adjusted that, the full trade management, where you scaled, all that type stuff. So that's just going to be kind of like you getting more reps. But really, when it comes down to what's the purpose of having a particular playbook, it really doesn't. It's not all about your trade management, at least for us as NADRO traders. For us, where does opportunity come from? Narrative. And so I think the focus of playbooks needs to be around narrative. Areas where, you could have trades where it's all kinds of different combinations, hopefully, of maybe long-term VWAP and structural areas, which support each other, provide either price or directional confluence. So, if you're going to build a playbook out, I would start with very, very clearly, what is the trade? In fact, let's go to the community room right now. You guys help me find it. Where is it? I did a little bit of a playbook. It's a very simple format. Let's see here. I think it might be in the One Good NADRO Trade section. Yep, found it. So here's an example, and you'll be able to find this. It's in uncategorized, and One Good NADRO Trade. What is the trade, right? That's the first thing I told you to do. This was a continuation play of a extreme fade off the yearly with a pickup in volatility, complemented by a weekly imbalance pullback, accessed by an extreme fade of ETH developing value area high. We can talk about the structural picture, the long-term VWAP picture. I like to add, hey, there's dissonance. So, it keeps good plays in perspective, that a lot of times there is dissonance in how you handled that. And then the actual entry, I actually did have a price action pattern, and I did have an order flow signal. So what is the trade is kind of like a abstract, but it's one of the most important things, guys. I don't care if you have to do it last. You need to have like an elevator pitch almost for a particular playbook trade for you. Most people, they skip that part and they just say, the yearly was this, the quarterly was this. I was really interested in this on the monthly, and the weekly was kind of dissonant, showing this. The CVA was this, and the recent days value was this, and the overnight balance was this, and there was dissonance between this and this, and I did this on DV. You're just listing a bunch of, you're just documenting a moment in history, kind of. You're not actually synthesizing to a higher kind of degree. Here's what this trade really is. And why is that important? That's important because the whole point of building a playbook is that so you can refer to it essentially mentally to identify a particular trade the next time it shows up. The thing that makes playbooking a little different and a little atypical for NADRO traders is that we have such a robust, loose framework way of identifying confluence and opportunity, which doesn't necessarily always include the same tools, right? But it's still a worthwhile endeavor to work on playbooking various combinations of those tools, and just getting, it's a way to get more reps in and gain clarity with yourself with the types of plays that are best for you. But once you learn NADRO, it's almost like you have a playbook established. I'm not saying that going through the exercise of playbooking is not helpful, because it is very helpful, especially at the beginning. Edward, how do you go about structuring your process goals over a longer period of time, say several weeks or months? Do you go week to week and update based on what stood out to you? Or do you have something more systematic, like focusing on several aspects of trade management, if that is a core area you need to work on? It's pretty rare for me to adjust process goals mid-week. So I almost treat myself like I treat my advanced group mentoring students. So we meet once a week, because why don't we meet every day? Would that be beneficial? Sure. We could go through your trades more specifically and kind of circle up more often. Sure. But weekly is ideal, because you can't you can't make a change in one trading session. You might have executed it well. You might have implemented the change you sought to do, but that doesn't mean that it's a new habit. And in fact, 1 week doesn't. But I find that 1 week of dedicated focus on doing something that you can control, and doing it well, is a really nice amount of time. So for me, Edward, it depends on my success rate with process goals, how often they change. It's probably going to be a week, unless something really crazy comes up that I have to address immediately and kind of shift my focus. But other than that, it's probably at least going to be a week, and I'm just going to continue doing that. Like, I think a lot of people know right now, my process goal is to really focus on not scaling out too much too quickly. I'm making more of a commitment to holding positions longer and things like that. So I have specific rules. I can't scale out more than 50%, and I have to leave that much of a core where appropriate, right? I still take scalps, and that doesn't apply. But when I'm in a narrative-based trade, I have process goals and things that I'm working on right now, because I've kind of gotten away from what I feel like my core identity is as a trader. So, that's something that I've been working on for over a week now. And, there's just not that many opportunities day after day after day to get into a fantastic core position that you do want to hold all day long and you're not, coming out of and whatnot. So it takes time to get enough reps in, I feel like, especially on a goal like that, where you're looking to really hold winners, all day. Which, one very well could have done today. I just wasn't as interested in buying the lower edge and buying the lower edge of some of the longer term VWAPs. But some traders reached out and they said, hey, wasn't that a good trade? Did I miss something? No, it was a very good trade. You did great. I was just kind of focused on a bit other areas with lack of clarity and whatnot. But there's layups, guys. There's absolutely layups out there. And it's kind of crazy. I'm not talking to new students. I'm talking to existing students. Well, old students, I should say. Where, like if we take a look at today real quick. We did end up getting the day one breakout pullback of our immediate structural area. And if that's happening, can you show me a time frame that tells me, no, this is a bad idea to be getting long? And the answer is no, you can't, because it doesn't exist. And here's where that occurred. Oh, that looks like an opportunity, doesn't it? And I had traders who got long here anticipating the breakout, and they're scratching out here because they're emotionally upset and giving back P&L and whatnot. These are places for the real entries. These are the easy trades. So my advice to a lot of you who are just learning this stuff for the first time is stop trying to move down this progressive path of getting more advanced and doing trickier things and getting into the more difficult trades. It's not a fruitful endeavor. And I can say from experience of watching a bunch of students flounder around trying to do that stuff. Wait for the layups. Wait for the easy trades. Don't make everything so hard on yourself. We opened up in the middle of an immediate, day and a half balance. We are from lower extremes on after having tagged a quarterly area on the monthly and the weekly. It's not like beautiful setup like it was yesterday, right? Yesterday, we were into the -2s. I was very interested in getting long. Ultimately, yesterday's main idea there, it took until this afternoon to fully play out, didn't it? Right? It was from here, from yesterday. And then today, as we're coming into the open, you see how we actually didn't make it all the way there, and we haven't quite made it all the way to quarterly, and we're just kind of like in open space here, and why I might feel a little differently about that than I did yesterday in terms of conviction and directional bias and things like that. But by all means, if you want to fade the lower edge of the CVA, I think that was the trade that did make the most sense into the open. You got the spring pattern right here to do so. And then from there, we're breaking out of the structural area. We have room to go to get up to weekly developing value area high. And before that, monthly developing value area low, right? And then there's, quarterly VWAP, which is kind of where we got to high of day. But you have open space to run. We also have our next most recent CVA to look at. But what's more important, if we go back to like week 2, right? Learning structural stuff. What's most important is being long from here. We're not looking to be short from this composite value area low. It's an area to take some profits by all means. But this is what's most important. This has the recency. And then we've got room here and wherever for where the long-term VWAPs are. So you get long here, if not already from here, which some people took. And you've got room to run to targets. And then from there, like we discussed with one of the first questions today, It doesn't really matter how you manage the trade, right? Whether you exit just into the target area or when it starts to turn as we get close to the target area, or whether you discretionarily hang on and see if you can get some more out of the trade. It doesn't matter. Follow the basic trade management principles, holding an imbalance, not trailing your stop too tightly. I hope a lot of this is coming together for a lot of you, because once you get it, the challenge really becomes, again, based on what I'm seeing from a lot of old existing students, is the challenge is just to do the simple well. I know that a lot of this hasn't felt simple to a lot of you, and it probably shouldn't feel simple, right? But at a certain point, it will start to feel simple. You'll make CVAs with one eye closed, you know? You'll understand long-term VWAP narrative, you know, in your sleep. And then it's just about executing. It's about continuing to work on your mental framework and getting out of your own way. Um, I would like to see how you handle the 23 split profile. We've already discussed that, right? You could split J period or K period, and then it's this lower balance becomes at the end of the day, well, at the end of the next day, you could say you have kind of a day and a half of balance there. So, okay, cool. Um, Hayden asks, and Hayden, we've been trying to reach you via email. Hey, Merritt, my question's about what you want in terms of people on your desk, and what do you want to see from them? Is it just scraping through the tryout? Is just scraping through the tryout enough, or would you prefer someone who breezes through the tryout and has been consistently profitable for some time? Is the idea to be really developing and advancing once on the desk, or should you be pretty comfortable with your style and setups before even thinking about the tryout? Do you prefer to have everyone on the desk use RTrader, TraderView? I currently use Edgewonk. Should I be transitioning over? What does a good week look like for one of your good desk traders in terms of R? I know there's no hard, fast rules or anything like that, but in general, obviously you want to be making money most weeks. But what is a good week? 10R, 20R? Are you looking into desk traders prep, hypos, journals just because they're on the desk, or is that just in advanced group mentoring? Okay, good questions. I'll kind of briefly hit this because, you know, I we do want to kind of focus on more learning stuff. I think people should join the desk as soon as they are able, not when they feel like they have really, 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 really arrived, you know, because I think that if you get onto the desk, and to answer some of your later questions and whatnot, I absolutely will be reviewing your work. You have to send me a review at the end of the day. Yes, I do use TraderView for all my traders, but that doesn't mean that you can't keep using Edgewonk if that's what you prefer. You're welcome to do that, but I would ask that you upload your trades into TraderView. And, you know, at some point we may have automated systems that allow us to do that for you as well, and then you don't have to do it. So yeah, that's the basic thing there. Don't try and achieve perfection, you know, because guess what? Even someone like me, a lot of times, you know, people think that someone like me is someone who feels like I've just arrived and this is just kind of easy now. And it's not. It's a grind. You let yourself down. The markets frustrate you. Things change. Markets evolve. Um, you miss a trade, you make a boneheaded mistake, like it's just more of the same. You just work on understanding markets better, understanding yourself better, and you get to a point where maybe you don't hurt yourself as much as you used to, right? And maybe you make a few less mistakes along the way so that you keep more of the P&L. Maybe you learn some skills and develop things, and you're able to hold winners longer where appropriate, and just those kind of things. And I can help you with those things, especially if we're working close together and we have transparency and you see my trades and I see your trades and all that good stuff. And not to mention your commission rates are going to be ridiculously low compared to anything you can do and on your own and all those kind of things. So get on the desk, like let's work on developing you and you don't have to pay for it and stuff like that. That's my take. All right. Diedrich, how much importance do you give to long-term price action levels? Not much at all, really, man. Which is kind of, it even feels weird for me to say, because I did come from such a background of, I prided myself on support resistance levels. And now I can't tell you the last time I've used a support resistance level. It's really crazy. It almost bugs me to even admit that I don't use them because they do work and they are good. But I've just found that value in its multiple forms that we use it across multiple time frames is just so much more powerful. And so it just became kind of a no-brainer to me. Like, this is the stuff that you should be using rather than the old kind of structural, well, not structural, shouldn't use that term, price action, support resistance type stuff. A lot of times though, I mean, think about it. Like if you develop a nice 2-day balance or whatever, like, if you pull up a hourly chart or something, or a 30-minute chart or whatever, you might come up with something close to value. But usually not. Usually price action levels are going to put you more at like extremes rather than kind of narrowing into where value is. So yeah, I don't use them these days. Kind of wild, I know. Gabriel asked, when the course is finished, do we keep the recordings? Yes, you will have access to the recordings. He also asked, should we always take pullbacks near DVA? If a pullback is in rhythm near the 1.5 or the 2, should we take it? So taking pullbacks from the 1.5 or the 2 are kind of what we refer to as a fast trend. And obviously you need narrative supporting any pullback you're looking to take, no matter if it's from developing value area high perfectly. Okay. But then the 1.5 and the 2, you really better have narrative in your favor. And there needs to be something else going on there too. And that's the speed of the tape. If you're taking what we call a fast trend play, the tape needs to be flying around, right? Like we saw in the S&P. Now, granted, the S&P can get into what the state that I hate the most, which is grind up mode, where maybe it kind of did like it did for not into the close, that was ramp mode. But for the hour or two leading up to that, it was just grinding in and around the +2. That's not a place where we have much edge, quite frankly. If you're already in, that's an easy trade to manage. Never threatens needing an exit or anything like that. Don't overthink it. Remember, do the simple. But if you're not in and the market's in that type of a grind mode with a lot of bar-to-bar overlap, but grinding higher, there's really no entries. There's nothing to do. However, if a market settles into more of a fast trend mode where there are good rotations and there is a sense of rhythm to that movement and the speed of the tape is high and narrative supports it, then by all means, you could take trades from the 1.5 or the 2. You just need to understand that you're expecting a lot from the market when you do that, right? It needs to really make sense, and there needs to be the speed of the tape that says that the energy is high and that there's energy for the sustained um, high energy required move, which is what it is. You can plot whatever standard deviations you like. I'm sure it's all the same stuff. Steve, as we begin documenting a trade and risk management plan, should we finally a question based on stuff from this week? Great job, Steve. Bonus points. As we begin documenting a trade and risk management plan, should we incorporate methods we may be testing and considering within NADRO from our prior trading experience? That's going to be up to you. I don't have a hard, fast answer on that. I do think in kind of first being unoriginal, if you're really interested in NADRO and you really like what you see over these past few weeks and your eyes are kind of opened to perhaps a superior way of seeing risk reward and things like that, then, you know, you want to continue developing particular skill sets, right? You don't, but at the same time, look, if you know you want to be kind of a scale in trader, by all means, develop your risk plan and your entry execution and your adding and all that, those things that you would need around executing that way. There's a million ways to ultimately execute, and it's important that you go with one that works for you. I have an advanced student right now that feels the need to add to losing trades with almost no risk in place. So that's a different issue entirely. Don't do that. You know, come up with a responsible plan, which I'm sure you will, Steve. But by all means, if you're comfortable and things are clicking and you've already got some really good best practices from your prior experience, then, you know, feel free to start putting it together and developing into your niche. That's ultimately where we want you to go anyways. Gabriel, should we always take, oh, I already read that. David, do you take a break after trading before doing your reviews? Yes, almost always. At what point should you be raising the alarm if you are seeing yourself making the same mistakes over and over again, and you've been doing that for a while? I mean, as soon as you see that, that's the time to raise the alarm. You need to consider repetitive mistakes like a cancer to your trading, because that's really what they are. They will wreck it, they will destroy it, they will kill it. It has to be this combination of redefining what it means to win, right? You've identified I can't stop myself from moving my stop to break even. So we've identified the cancer. We've got to cut it out. How do we do that? You redefine what it means to win the next day. Your sole goal the next day is to achieve a process goal of handling your stop placement and moving of stops, if and when it's appropriate, based on a particular process that you have laid out. And you have to care more about that than you do about winning the next trade, making money the next session, right? It comes down to mental framework. It comes down to having a process to lean on. It comes down to being self-aware enough to take conscious control of your actions. It comes down to just a sheer grit of, I'm going to fix this and I'm going to do whatever it takes to do that, using all these things that I'm talking about. So the process has to be there in order for you to know what truly to do. Don't just say, oh, don't do that, right? Got to stop doing that. Give yourself something to do, which ultimately solves the issue of what not to do. And redefine what it means to win, right? You have to make it a priority above anything else related to trading. And that's what most people can never do. They can write down a process goal, but once they start trading, all they care about is P&L. And there's that old phrase about, well, it was the one I said from Yoda, right? About you got to learn to let go of what you fear to lose the most, or whatever, right? And ultimately for traders, that's really P&L and being right and controlling things. Letting go is extremely liberating. Yes, process goals are almost always, for me at least, things that I'm wanting to improve and correct and do better. Doesn't mean I'm not aware of things, as you saw from my review process notes this past week, of things that I'm doing well and that I want to continue to do. And maybe I crushed my process goal today and I want to go crush it again tomorrow. But over the medium term, looking backwards, it has been a weakness. So it's something I want to improve on. But yeah, I do think for me, it works to kind of like shut it down, get away from the screens a little bit. I'll typically make sure my trades are imported into TraderView or things like that. And just kind of don't think about it for a while and then come back with maybe a little bit more energy and hydration and snack and after having a little bit of space from what I did, gives you a little bit better perspective. Stephen, I recognize market internals, tick, AD, etc., are not part of NADRA, but if we currently use it, do you recommend to continue to do so? What's your overall opinion on its value? Oh, absolutely. There's time, if I was a S&P, NASDAQ, Russell kind of specialist, and that's all I focused on, I would absolutely incorporate internals into my day-to-day process. I know people who do it, who use it, who are very successful with it. So yeah, I think if you're focused on the S&P, I think internals are a great underlying confirmation, almost like what we'll talk about tomorrow with cumulative delta and things like that. And in fact, I've had at length conversations with traders who use a lot of internals, and a lot of times the delta tends to reflect similar things and whatnot. Maggie asking for some tips for keeping focus while trading. I'm good the first couple hours and I tend to get bored and lose focus, miss trades. I know you said in the past it's not an issue for you, but any ideas on what's helped others? Really taking breaks is a huge one. There's a reason why it's good for the first couple hours. It's because there is a lifespan, even for me, for everyone. There is a lifespan. There's an attention span. There's a shelf life to willpower and focus and quality attention and quality decision making for all of us as humans. So I think it's really important that you understand your particular limitations around focus or whatever it may be, and find ways of freshening up, right? Could be a midday workout. A lot of traders that I worked with in New York worked out during lunchtime, totally away. They might have a position on, they might not, doesn't really matter. Stops are in place. And it was just a really good part of their routine to hit the gym, get some lunch, shower, and then be ready to come in and focus on the last hour or two of trade. So something like that could be good. Also, guys, you don't have to trade all day. Even though, if you're an intraday type position trader with NADRO, like, don't be afraid to walk away with some OCO, server held OCO bracket orders in. They're not going to let you down. That would be a major multiple server crash, failure, different locations going down. Like it would probably have bigger problems in the world if you know your TT or CQG or CTS or whatever, like server held orders were not going to work. So don't be afraid of walking away from the screen. You know, your overall health in terms of sleep, your overall levels of energy and hydration. I know I'm hypoglycemic. I get low blood sugar. I kind of constantly need to be getting some nice carbohydrates in me and stuff like that, right? I have like a metabolism of a bird and struggle to, you know, keep weight on and whatnot. So I have to like take care of myself in that way. Else I get massive, you know, mental fatigue and shakiness and things like that because my blood sugar drops. So you got to take care of yourself in all the ways that you need. And then I really think that taking breaks is critical. And then finally, like I was about to say, you don't have to trade all day. You don't, you know, I think from early, you know, just pre-market up until um, around lunchtime or just before is perfectly fine. There's going to be most of the best opportunities are going to be in those times. Whether or not it's the trade is done or not, that's debatable. And I know we're looking at a chart here at the S&P where during the lunchtime, you know, New York time, noon and 12:30, those were also some of the best trades. So you're going to miss things like that. But if you're sitting around and your performance degrades and your focus degrades, you're missing the trades anyways, and or you're getting into trades you shouldn't. So you're not really worse off by not being there. So, you know, find what works for you in that regard. But that's a great question. Okay. What's your opinion on sharing some outstanding performance from your traders, maybe like what other firms are doing? Um, you know, I've shared some more from my own trading and whatnot. If you're paying attention over the past month and whatnot, so you know, I've shared a lot more lately than I ever have been and ever have been able to, and I plan on continuing to do that. Like you could see some position sizes I've had on and all kinds of things lately and some performance, and it's you know, it's been okay, but it's not like a banner crazy fantastic, you know, performance or anything like that, and I'm okay showing it. But yeah, you know, you show people one thing and then they want, I'm not saying this is a problem with you, Tony, but you know, you show people something and they say, well, maybe that could be fake, show us more. And then you show them something else and they say, well, now we're going to need to see your brokerage statements. And you show them your brokerage statements and they say, oh, well, now you know, probably had those fabricated. We're going to need to see your tax returns. You know, it never ends, right? So it's just like, but yeah, I understand. And once, you know, if you're on the desk for us, it's a fully transparent environment. I think that's very important. People outside the desk, even you students, you're just not important enough yet for that type of transparency. That's just my opinion on it. But yeah, great question. I will continue to show you know, various things in the real-time room and all kinds of stuff like that. Okie dokie, that's all the questions. Have a great weekend. Get ready for a barn burner lesson on Monday as we dive into order flow. And by the way, don't sign off yet. We're doing live trading next week. So speaking of showing what what we're doing and whatnot, you're gonna see me trade you know, the morning session all week next week. So watch for an email. It'll come out this weekend. We'll talk about details about joining that stream and things like that as I get that set up. Okay. Cheers, guys. See ya.